Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, June the 26th. The year's 2020. Let's talk trading. It's time for the weekly wrap up. And as you all know, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. Now, I tell you this every day, so today's going to be no different. Your risk management. You don't want to lose any more on any one particular trade than you're willing to lose. You can use dragon money management, where you divide your portfolio up into 20 pieces. Each piece represents 5%. So you're willing to lose 5% per trade. Some people say that's too high. You should only risk 1%. Well, if you've got $1,000 account and you risk 1%, that's $10. Well, if you make 1%, that's $10. Well, in some states, that's minimum wage, not where I live in Oregon. But anyway, just make sure you have your risk management in place and money management. Let me tell you something. The market will take it back so fast. It'll give you a blink of an eye opportunity. Sometimes you can't even execute the trade. It is as fast the time as it moves. Let me tell you, it just stole 7 pips from me on the pound right there at the top of the hour, right before this video. I was long. It hit a place where I said, okay, I'm out. And then all of a sudden it's like, what? It dropped. One trade got out where I wanted, but the other one dropped 7 pips on me. Just like that. And the sad thing is, had I left it alone, it would have been in. I got a call from Walmart there, but he was in the car, so he can't participate in the video. So anyway, yeah, you got to be quick, because otherwise you're going to feel stupid and you're going to regret missing out. So, and that pain, it's not the market. Once again, it's your reaction to the market. Um, it just really is. So let's get on with the charts here. And you can see the pound for the week is just 10 pips above the weekly open. It gave back all of that. All the gaps filled. We've known that. Here you see we dipped below the opening range of the month right here, the opening range for the week. Now we've come back up through it. Usually those are breakout trades, but sometimes people like to do what they call the break-in. And as you can see, it can be profitable. It's simple, trading with candle color at horizontal line. In this case, we're trading with the D1 candle color at the horizontal line. And for the day, you can see we're down. The mid dots there showing, I believe that's the previous midpoint. I always forget if, yeah, because that's magenta. If I had the pivots, that would be purple. So that's a magenta dot, previous midpoint right there. And I use that as a bias. So if price is below the previous midpoint, I want to be short. If it's above it, I want to be long. Just a bias. We barely got inside that inside bar from 21 days ago. Price pushed out. It's 6 pips above it at the moment. Lots of inside bar action today on the daily and the weekly. We've only got 1, 2, 3, 4, 5 pairs over 100, and they're all pound pairs. In fact, I had when the pound dollar got down here, which is what Walmart and I have been trading, I thought, I should do one of those no look trades. So I also put in a trade on the yen, and I think I picked up, I don't know, a pip or something, just to throw it on the pile. The weekly open cross, this is a trade that can pay off big time. You see here, after being up all week, it came right back down to the open and crossed it hard, came back and crossed it hard the other way. So if you were in the trade and it was stalling around 40, now you know why. It was the weekly open. You really should be aware of the opens of the week, the month, and the day, and the year too, for that matter. That's why I show that chart earlier on in the video, just so you have an idea of these levels. because there's going to usually be some price action around these levels. And you can see here it came back, touched it, and shot right back up. So knowing that, you can sit here and just wait. See if it crosses. If it's moving away, you jump in. If it's crossing, you jump in short. And as I mentioned, to the rat traders out there, especially you new rat traders, sometimes it pays to wait. So if you waited, I don't know, the past, let's see, New York time, well, my time right here, we got 10, 9, 8, 7, 6. So if you would have waited, got in here, you just waited, it came down here, then you wait again. Maybe you waited 1 or 2 hours, but look what you got. You got an H1 opening in the rat zone. You take that long, and you see here on the second one, you had an opportunity to get long in the rat zone, even though H1 was against you, but it never got down to that whole low, that lowest open there. So you had an opportunity to take some pips off the table. Now, somebody wanted to change up these biases. No, this indicator is fixed. It's fixed because it shouldn't be messed with, okay? It was designed for a particular purpose, and those settings that aren't up to the user. That's the trade right there. So you don't get the monkey with it. Now, one thing I want you also to be aware of, and I may have mentioned this in a video earlier this week. One day out of the week, the rat zone, the daily rat zone is also going to be the weekly rat zone. And then one day out of the week, the it's going to happen on the bottom at the low, and it's going to happen at the high. Sometimes, maybe even on the same day. Not usually. But why do I mention this? Because if you look at these rat dots, you can see here Wednesday, this was the highest rat zone right here. So the weekly and daily rat zone matched. Look what would have happened if you took that trade out of the rat zone. Now, that's hairy hindsight, right? We're going to call that a hairy hindsight trade. But we know that one of these days it's going to be. So here on Monday, so you got Friday, Thursday, Wednesday, Tuesday, Monday. Let's come back just a little bit. So 1, 2, 3, 4, 5. No, Monday, Tuesday, Wednesday, Thursday, Friday. Right here is Monday. I guess the easiest way to do that is just to put the crosshairs on and look at the date. So Monday, 6/22. Or if you're in Europe, 22.6. So this was the lowest rat zone. The daily and the weekly matched. And so at the end of the day, this is the weekly high rat zone, weekly low rat zone. So what happens? We put in a new high. So this day, this is the weekly high, this is the weekly low. This day, here's the week. Oh, I'm sorry, this is still the weekly low, but and we got a new weekly high. Price came out of the zone. What happened the next day? And you see here today, we put in a low, a rat zone lower than this rat zone. So what that shows you is that if you want to do some of those kind of, like I call them, the no look trades, and you go, hey, it's Wednesday, Thursdays are days where, a lot of times the market reverses, especially on the pound. There's been a lot of other people actually did some statistics and on it. I guess they ran frequency distributions to see how often the pound peaks on a Wednesday or Thursday and how often it, hits the trough or the valley on a Wednesday or Thursday. So just knowing these little things might give you confidence. You got short here, you're making some profit. You go, you know what? Maybe I'll let that trade ride, considering at rollover time, the pound pays you if you're short. It steals from you if you're long. But that's just how it works. So, rat zone, no, you can't change you don't get to change any of these settings in the rat zone. That's fixed. And it's not because I didn't want you to, but this is statistics. This is a trade, and it's just telling you what's going on. So no, you're not going to get to change these. Okay, enough on that. And the dynamic rat zone here, once again, it shows you where the rat zone was for the whole time and where you could take advantage of it. And for those just tuning in, it's the TRO dynamic rat. Those are all free indicators. Okay, here we go. Back down through that weekly open. We hit the pivot today. Did we? I'm pretty sure we hit the pivot today. Yeah, we hit the pivot today. So we still have 2 missed pivots for the month of June and a couple from March. So those are your missed pivots as of late. And you can see here we got a whole bunch from 2019, well, 1 from 2019 and 4 from 2018. Oh, the WICK zone. There you go. Bam, right through it. And if you're wondering, you can see here yesterday, almost the whole chart was a WICK zone. Okay. So you can see the WICK zones are basically overlapping. There's not too much room there. Looking at the smart range indicator, somebody was asking about the old TRO range gauge. It's like, man, that's like a 2008, 2010 indicator, bringing back memories when I was first cutting my teeth on MT4 and making those little gauges, because I like gauges as opposed to squiggly lines. But yeah, the range gauge, it pretty much was like the price GPS. In fact, I took that idea off the range gauge and I put it on that magnified market price indicator that I use on some of the charts. So close minus open, high minus close, close minus low. You know where it is. But see, the difference with the smart range is not only does it give you that information, but it tells you the percentile where the current range is in relation to the last 100 bars, and then where these previous ranges were in relation. So on the daily, that 76 yesterday, it was only 13 out of 100 were less than 176 for the pound daily range. And how this helps you is, especially on the hour, when we trade, we look to see what were the 4 past ranges. So it's like, does it have any more gas in the tank, especially during the active hours? So like right now it's a little more quiet, but when this was down around 17, we look at it, go, wait, look at this 20. It's like it's got more gas in the tank, and sure enough, it ran all the way up to 29. So on those breakout trades, it tells you. But what it also tells you is when you see this getting up, past 80 or closer to, 70, 75, 80, 90, that's when you can start looking for reversals. So when you're trading scalping at the beginning of the hour, you want to trade away from the open. Okay? When you then get into, say, the second half hour of the hour, or if it's already hit its range, that's when you can start looking for reversals. But don't look for reversals, if this number is less than 50 or less than 40. No, it's suicide. You might get a 1 or 2 pip reversal, but that's about it. And no, back to this indicator. Hey, I'm still working on it a bit. I've got to do some editing to it. The training wheels, no trade. But it was funny because depending on what pair, let me see if I can find one here. It'll say no sell, no buy. And so, okay, let me see. How about the euro? Yeah, no sell, no buy. So it's like that Bob Marley song, No Woman, No Cry. No sell mine, no buy. No sell mine, no buy. In fact, I completely rewrote the lyrics, so I'll have to shoot a video. You guys can laugh at me and say, hey, you better keep your day trading job because you can't sing. Anyway, gotta have fun sometimes, right? Because remember, fellow traders, it's not what you trade, it's how you trade it. So, once again, I hope you all had a profitable week of draining the banks. Have a real fun and safe weekend, and especially stay safe out there because there's a lot of craziness going on. And I'll see you guys back here next week. The Rumpled One signing out.